So the market could really move down to any of these prices in here, have a quick move back out. We don't want to see it consolidate under these levels.
Hello everyone! When it comes to deciphering the complex world of cryptocurrency and stocks, there's no better companion than the renowned trader, Jason Pizzino. With a wealth of experience and a keen eye for market dynamics, Jason is your go-to expert for understanding and analyzing the latest trends and charts in the ever-evolving crypto and stock markets. So, if you're ready to navigate the exciting world of crypto, Bitcoin, and stocks, hit that subscribe button now. Join us on this exhilarating adventure towards financial growth and success. Don't miss out. Subscribe, like, and share today. Bitcoin's percentage share in the crypto market has risen to nearly 50% in the aftermath of the last week's altcoin market rout. On June 13, the Bitcoin Dominance Index, BTZD, which tracks BTC's weight against other cryptocurrencies, reached 49.29%, slightly down from its two-year highs of 49.66% seen earlier this week. The surge in Bitcoin dominance comes after the United States Securities and Exchange Commission's SEC lawsuit against the crypto exchanges Binance and Coinbase. In its court filings, the commission accused many leading altcoins, including Cardano, Solana, and XRP, of being unregistered securities. Bitcoin's market share typically rises during high market stress, given that traders view it as the least volatile, non-stablecoin crypto asset than most cryptocurrencies. For instance, at the height of banking crisis in March 2023, Bitcoin's dominance versus altcoins had also rebounded to 50%.
Bitcoin is holding above the 50% level. So this takes us across to an update for BTC. We're currently trading around $25,900, basically $26,000. The short term, before I get to the reaccumulation areas, is we're looking at zones that the market is trading between as it continues to filter out the supply and the demand. Where is the demand coming in? Where are people buying and where are people selling? That's all that ever happens in the market. It's always just buy and sell. It's really that basic and that simple, but that's boring. That's way too boring to talk about. The main thing to talk about is the news. What's going on in the news? Oh, what do we have? The last thing we had was the SEC suing Binance and Coinbase. That was this bar right here. Then we had the altcoin reckoning, which was that bar right there. It was basically nothing, and the price is still trading within this range. Will it continue to? I don't have that crystal ball. What I do have is my support and resistance zones, and I have my plan. On top of that, I manage my emotions in the market, and that is primarily what I'm talking about here before we get to those reaccumulation areas. Because when we're in these small, tight trading ranges, any sort of move to the downside is extreme emotion. 5th of June, if you remember back to that, that was the suing of Binance and Coinbase. There's always some news and narrative event that's put to one of these days. That was all of 5%. Okay, if you want to take it to the extremes of the day, it was 6.4%. We take it back to the Saturday 10th, 4.3% the whole day. That was when the altcoins got wrecked. And then it was 2.5% where it ended up closing. Now the market's still hovering within that candle itself, within the body of that candle. Now it can continue to go down from that point. In terms of percentages, we're looking at to the 50% again, somewhere around 2.7%, maybe to the bottom of this zone, which I'll talk about in a second, 8 or so percent, looking at around 23.9. Around that 24K level, which we've covered for many reasons. But the point of this is those moves to the downside, although how minor they are when we look back on them, they feel extreme in the current environment because we haven't had much to keep our adrenaline pumping. Over the last several weeks, there's not really been that much to talk about, and the emotions basically just all get churned up and they wait and suppressed. It gets suppressed, and then we get some news announcement, some news event that pumps the market down or dumps the market, and then the market pumps straight back up. So this is a typical or characteristic sign of a market climbing the wall of worry. Here's some worry, market climbs again eventually. It takes some time, but nonetheless, it'll eventually climb out of it. That is basically what happens with those emotions. Everyone is just holding on, hoping and waiting for something. News event, nothing much has happened. So any sort of move is quite extreme. Think about it as if you were starving. You're starving of adrenaline in this case. So something happens, awesome. Now we've got something to be worried about, something to be fearful of, something we can go back to with a narrative and try to explain whatever the hell is going on in this market. You're wrong, I'm right, etc., etc. And then all the fights start from that point. That's what happened again on Saturday. Yet, look what the market's done, nothing. So, and what we want to do here is just look to where those moves to the downside, the actual price, could head to while remaining bullish. Now we have the one key area here. That's that low in March, 19,500 or so. Looking at that price, 19,568. So the market could really move down to any of these prices in here, have a quick move back out. We don't want to see it consolidate under these levels and still be in a macro bullish structure. So that just means time to buy, time to reaccumulate. And I want to go through that in a chart in just a sec, looking at key price levels as well. But we've got to understand what can happen when it comes to the narratives, what happens with the market sentiment, because of course we saw that just on Saturday, literally like 3 days ago, how extreme the feelings get, and we just pause. We freeze like a deer in the headlights, just like what happened in March when the banks all collapsed, or basically a couple of banks collapsed, banks that weren't even in the top 5 or top 7 or 8 in the US, but the headlines get you. I still see that come up. It was the biggest banking collapse in history, or the second largest. Sure, it was the second largest, but the data just screwed with those people again. Because even though it was the second largest in history, the bank itself was nowhere near one of the biggest banks in the world. So it was 200 billion, 230 billion that collapsed. The biggest banks in the world are in the trillions. And when you accumulate all those banks together, this one bank didn't even mean jack shit to the entire market. Now, some people might think I'm speaking out of turn here, but the market speaks for itself. It's unbelievable how much people get caught up in the news headlines and the narratives. So I emphasize so much on the market sentiment or your own trader psychology, because once you can get through that, once you can break through that part, you've basically won. You will win the game. Now you just need to have some rules in place to make you act when these things happen. So overall, we're in a macro uptrend. We're in a macro uptrend. The major areas have not broken down. The major lows, the monthly lows, nothing is broken down. So if we break down from this zone, the market is now looking to test where does that demand come in. And we have key levels, looking back at history, where this demand could come in. So we're setting up our plan here. We're setting up what could go on. So if we get the move down to the downside, providing we don't break 19.5K, then these are all basically reaccumulation zones, and we just wait for the market to head back to the upside. Of course, we don't want to see the market start to consolidate under these levels, meaning multiple bars, multiple closes, and the market just basically continues to grind on down. That's not what we want to see. But again, at the end of the day, when it comes to trading and investing, there are no guarantees. There's just how we act when the market gives us those signals and how we protect our profits at the end of the day. So that's the short-term look moving forward in case this thing does break down. We've got our key levels there, 2014 into the 2015 bear market and the 2018 into 2019 bear markets as well. The same narratives continue to pop up. Previous 2 cycles ago, Bitcoin will go to $100. It didn't, and it basically hovered around 200. Sure, there were a few spikes down to 160. You can bet your bottom dollar barely anyone was buying there, but the few who were buying up a lot because we see it on the volume. There was a lot of volume. There was a lot of supply coming into the market, and the demand just held it up. Same thing happened at the lows in 2018, 2019, and then again at the spike low, the pandemic low in 2020. I remember that time there. I bought a little bit in one of my portfolios, not enough, as hindsight would have it, but I did buy some in these zones at these levels, underneath this mark here, around $5,000. Anyway, not to brag on that, but I remember from that point, it was very emotionally difficult to be buying at that time. But the main thing that held up was the lows. The market continued to get higher and higher from that point. So although in hindsight it looks like, just wait, the market's going to break 20, and then I'll buy it when it hits 20. When that happens, or if it happens, it's so hard to be buying at those times. So it's great to have a plan in play, because always there's always going to be someone saying, well, it's going to go lower and lower and lower. So last cycle was we're going to go to $1,000, never got there. Only 3,100 was the low, and then basically held up at 3,500, hit its head at 4,200 a few times, and then broke out of that zone. Same thing in the current cycle. When we hit 17.5, all of the calls for 14, and then 12, and then 10, and 8, and $3,000 continue to come up. And guess what? The lowest it got was 15.5 for a matter of days, and then pushed back to 16.5, 17, and then basically we didn't see the teens ever again. So those historical buy zones are essentially the cycle low to the cycle top, and then I've used the fib to divide it up. Basically, you could have a correction of 75 to 87.5%. That's what these two levels are here, because I'm taking the 25% and the 12.5% of the zone when we look at it to the downside, which would basically be a correction of 75 to 87.5. And that would give us that buy zone within that cycle. We had that quick spike to that zone again for a matter of days before the market was out. Same thing on the previous cycle, same correction, got the buy zone. It happened to stay there for several more months than what happened last cycle. And this cycle, we barely touched it, which shows that Bitcoin is becoming less volatile than what it has in the past. Sure, there's only 3 cycles. Maybe we do more in the next cycle. Nonetheless, this is what we have right now. And all we're using this data for is to give us those buy zones and then reaccumulation zones. So with that in mind, looking back at the cycle of 2015, 2016, you can see that we popped out of these white lines. That's the first accumulation zone, and then into the zone of white and yellow, which is the 38% here. So there was good opportunity, plenty of opportunity there. But again, looking at the market sentiment, what was happening at the time, at this stage, it's pretty much what's happening at the moment. People are saying, well, this is going to go back down. You just wait. It's going to go under $300 again. Going to go under 250. It'll go under 200 again. I wouldn't be buying. You just wait. You guys are all going to get screwed. Blah, 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 blah. Same thing happened again. And yes, the same bearish fear will come up with a different narrative. This time around, it's Bitcoin's never seen a recession. Well, we're not even in a recession for starters. And yes, the recession keeps getting pushed out further and further and further. But again, it's just the narratives. Even if it isn't a recession, the rest of the market, like I covered at the beginning of the video, is going up and up and up, and potentially will come back for a correction. So that's the zone. It's holding up at those levels there and then continue to break out to the upside. Again, it basically blew through this area and there wasn't really a nice reaccumulation at a reasonable price until it came all the way back 6 months later and sat in that zone for a few weeks, pushed out, COVID, sat in it again, and then pushed out again. So it wasn't really too much opportunity. This time around, we've been sitting in that zone for much longer. So this could potentially be another reasonable reaccumulation zone before we start to move our way past 28K, 29K, and then of course the 31K tops.
Also, don't forget to smash that like button if you find our videos informative and valuable. Your feedback is crucial in shaping the future of our channel and helps us understand what content resonates with you the most. Thank you.